it's a certainty that there will be a failure to deliver. I mean, you're talking about triple-digit silver, maybe a fair-sized number in front of it. $400, $500, $600, who knows? Price of silver has been suppressed for so many years with naked paper contracts, and the game just kept going and going. It could have easily been blown up by Russia, could have easily been blown up by China, but that would be an act of war. And they basically left us to our own methods of destruction, of destroying ourselves. And that failure to deliver is going to happen. When that happens, it's going to set a time bomb of derivatives defaulting off. I mean, that will be the end of the financialization of the West. Well, the price of gold has gone higher from an institutional standpoint. You've got institutional buying, you've got hedge fund buying. Most importantly, you have central bank around the world buying. Oddly, and I mean, you couldn't have told me this scenario 2 years ago, 5, 10, 20 years ago, that the world would be on the verge of World War III and the public would be selling gold. They're selling gold, they're selling silver. And I've seen more sales in the last 6 to 9 months, just in my own personal book, in the last 9 months, I've seen more selling than I've seen collectively in the last 15 years. That tells me that there's no money on the streets. That tells me people, the average person, is running low on funds and selling assets. And of course, you know, what asset are you going to sell? Something that doubled or something that's down in value? So you've seen gold, you've seen silver from a retail standpoint has been sold to raise capital, but from a central bank standpoint, they're unloading it left and right. I think the event or the response to events is that we see a failure to deliver, because there's so many paper contracts out there per real deliverable ounce that it's a certainty that there will be a failure to deliver. That failure to deliver, I mean, you're talking about triple-digit silver with maybe a fair-sized number in front of it. $400, $500, $600, who knows? You just have to understand that the price of silver has been suppressed for so many years with naked paper contracts, and the game just kept going and going. It could have easily been blown up by Russia, could have easily been blown up by China, but that would be an act of war. And they basically left us to our own methods of destruction, of destroying ourselves. And that failure to deliver is going to happen. And when that happens, it's going to set a time bomb of derivatives defaulting off. I mean, that will be the end of the financialization of the West if there's no supply. I mean, it will end in a failure to deliver. And look at the price of gold, look at the price of silver, much, much higher than they were 6 months, a year ago. And all of those shorts are underwater now. All the shorts in silver are underwater. All the shorts in gold are underwater, which means they've got to be meeting margin calls. And okay, so the money gets printed up and maybe even lent to the shorts, but it's not going to make any difference, because at some point in time, the herd will move in unison and say, I want my metal. I don't trust a paper contract. My late partner, Jim Sinclair, used to always say, what is the value of a contract that cannot perform? And the answer is zero. And if you're zeroing out contracts, I mean, he was talking about, you could see COMEX gold, $10 offered, $10 offered, no bids. And you could see it in the cash market, $50,000 bid and no offers. And that illustrates the value of a contract that cannot perform. It's worth zero. But that's going to bleed over to the entire derivatives complex. I mean, what does that mean for oil contracts? What does that mean for rice? What does that mean for wheat, orange juice, et cetera, et cetera? It's going to push the world more or backwards toward cash and carry trade, as opposed to the financialization where paper contracts can push the price of an asset around to fit whatever the current narrative is. First off, it was the attack was done, a day or 2 days before Sunday's scheduled peace talks. So from that standpoint, you could look at it as a Pearl Harbor. If you look at, you got to look at the reasoning behind what's happened. Iran was on the list, and this list goes back to the year 2000, 2001, where they had, I forget all of them. I think it was Yemen, Iraq, Iran, Syria, Libya. That was a hit list, and Iran is, one of the remaining on the hit list. You could also look at it from the standpoint of liquidity's getting tight, and historically, the way to ramp up an economy is to go to war. So, now you've got the military-industrial complex is going to be fed again. Do I think the U.S. is going to join in this? I certainly hope we do not. But it looks pretty imminent. I mean, what did we do? We've sent refueling aircraft to that region. We're relocating naval assets. To me, it looks like the U.S. will join. You'd have to be actually in the backroom discussions to know whether or not Israel acted on their own or not. My biggest concern is that Russia jumps into this, and understand that Iran is a major supplier of oil to China. And they've just signed a bunch of, over the last year, they've signed a whole bunch of trade deals guaranteeing them X amount of oil. Is that oil going to even be produced after the smoke clears? So, I mean, the danger is that Russia gets involved, China gets involved. You're talking about a world war. Well, yeah, as of this morning, it's different. We've already had 2 tankers in the Strait of Hormuz that collided. You've got one that's on fire. I don't know the likelihood of it sinking, but obviously that would be an ecological disaster. But if you start plugging up the Strait of Hormuz and that's not able to be used, that's 20% of all the oil that's transported worldwide. So, I mean, that's, you're putting a crimp in supply right there. I mean, if this does go hot, it's already hot, but if the U.S. does join in, if Russia follows, if China follows, I've seen numbers of $130 oil. I think it's plausible you could see $300 oil, depending upon, what happens to the infrastructure of Iran producing oil. Does anything would anything flow through the Strait of Hormuz? Probably not.